Let's get the latest on that with Phil Flynn from PFG Best in Chicago and Jonathan Barrett from Commodity Broking Services in Sydney. Nice to talk, gentlemen. This push towards 102 US a barrel. Phil Flynn, markets saying that this is sustainable at these levels, or is this still seen as a bit of a short-term blip?
You know, Ben Bernanke would like to tell you that it's a short-term blip, but I think the traders are saying this could be the real thing. This is a real emergency. This is not a drill, and this thing could go higher. I've been watching this market all day. I'm looking at the charts. The charts don't even look that overbought anymore. This is serious. I don't think anything in history that I can recall really matches the threat to oil supply. And I'm not just talking about Libya. I'm talking about the entire region. And, you know, to be honest with you, I think the market is fairly pricing in the risk to supplies at this point. It's absolutely immense, and I don't think you can underestimate it.
Jonathan Barrett, how are you estimating the situation, particularly when you look at that Saudi Arabian market and the levels that it has plugged or plumbed of recent sessions? Is that a barometer for a potential spillover into that economy and maybe production outages?
Yeah, Carsten, I think it is an interesting thing. But one thing which I'm looking at is that the global equity markets, although they're under pressure, they're basically, in my mind, saying that, look, we think this will be contained. I think that if it does start to spill over to number one and number two producers, i.e. Saudi Arabia and then Iran, then I think we do have a major concern on our hands. We do know we had some concern in Bahrain. That seems to be weathered over a little bit now. So I actually feel that the extension of this concern into those Middle Eastern countries will be the barometer of whether we see 130. But I think if we see 130, I think that is a disastrous type of move, because I think stimulus packages and high oil prices do not mix too well, and I think that to me would be one of the biggest issues.
Well, is there a middle ground, Phil Flynn, between those two? That is to say, in the same way that Asian economies see their prices at the pump capped by authorities, the US might be minded to do just the same thing.
Well, if they really want a disaster, they should do that, because, you know, we saw how well that worked during the Arab oil embargo. You know, I call it the lost decade. You know, that's exactly the wrong thing to do. In fact, probably the only thing that may stop energy prices is high prices themselves moderating demand. And if you try to step in the way of that, you could do some real damage. But, you know, I'll take it a step further. You know, this civil war possibility, or what's happening in Libya, is really dangerous. I mean, look at how close those missiles came to that major oil storage facility. You know, we're not just talking about the loss of Libyan oil like there was a hurricane or a flood. I mean, this could be for years to come. And I am gravely concerned about the way this is spreading. You know, you don't want to underplay Saudi Arabia. A lot of people think Saudi Arabia is low risk. But, you know, we're talking about a Facebook campaign to have 2 days of rage. They arrested a Shiite cleric, just because he said maybe we should have a monarchy in this country, a constitutional monarchy. I think the risks are still very, very high, and I think that's why the market is so nervous.
And, you know, Jonathan Barrett, how long do you see this as playing out? Because assuming there is regime change in some of these economies, it's what comes after. It's the unknown handling of democracy in states that haven't known that before. That is the big unknown. It
is the big unknown, but I think when we look at the way particularly Libya is panning out, one thing we've also got to look at is the fact that 95% of their revenue comes from oil. So you'll have more of a humanitarian concern if, in fact, missiles start going through the oil productions and the refineries and the ports. So I think people understand that is a concern, and you'd probably have more grave fears if, in fact, things started to blow up. So I do think it's an issue. But you've also got to look, in that move to democracy, it takes a very, very long time for democracy, the way we know it, to come through. You know, you just really have to look at what's happening, I guess, you know, in Afghanistan. You've got to look at what's happening in Iran as well. This has take a long time. So I actually feel encouraged by the fact that some of these countries, Saudi Arabia, Bahrain, Kuwait, actually have a monarchy and an institutional monarchy that reflects part of their history. So to move this aside, I think the civilians within that, or the citizens within those areas would have more of a concern that they're going to change things. So given that, I actually feel that it still remains relatively low risk, but it obviously is something we have to remain very close to.
Jonathan, Phil, do you see it as contained like that?
I would love to see that, and I think he's right. I think in those countries, the chances of a more pleasant move to democracy is a lot more likely than they are in some of the other countries. And if it goes that way, that would be wonderful. But as you see in Libya, there's other countries that are still going to pose a risk. A lot of these guys aren't going to go very easy. And I think Libya is going to be a very strong test case to see how some of these other countries go. Another country today, the Yemeni president just said, hey, I'm going to step down in a couple months. Sounds like he's like Hosni Mubarak a couple weeks ago. Yeah, I think long term, this could be the best thing in the world for the region. It could be the best thing for the global economy. It could be best thing for everywhere. But it's getting to point B that I have to worry about as a trader on a daily basis, and the risks that develop. And when you're trading headline to headline like we have been the last couple of days, it's going to be very volatile, very dangerous, a lot of opportunity as well. But that's what I'm more focused on here. And longer term, listen, this is going to be a great thing. Short term, it's going to be very interesting, to say the least.
Jonathan, at what point does gold and silver become the real safe harbor? That investors look to that overnight. Both those two key commodities, precious metals, did spike, but it's taken a while to get some concerted price action moving in those two. Are you seeing it now a strong build likely?
Look, Carson, you got to respect the break in gold. I think that's the key. The old high we had, when you're looking at say 1425, 1426, the market has stayed above those areas. So you've got to respect that new break. One thing I am noticing is that US dollar remains very, very weak, yet gold remains firm. Now, if it's a safe haven play on it, you'd probably expect the dollar to be firm and gold to be firm. So I actually think investors out there are going to run with this for the time being because they see it as a safe haven, and they also see it as a quasi-fight against any inflationary pressures, which are certainly out there. So I think there's a general move to gold on a break of that 1426. If it's sustained by week's end, then I think you'll probably see more targets, 1450, maybe even 1500. But I think it has to stay above this 1426 in order to keep the momentum moving and to keep gold trading higher.
Phil, is that the level you're eyeing, and do you see that that dollar weakness is just contributing at the moment to the lion's share of buying action?
First of all, any level that Jonathan's looking at, I'm going to look at because that man's damn good. It's darn good, excuse me. The other thing is, I think he's right. The other thing I have to look at is the dollar and its impact in the safe haven play. And I think you're seeing kind of the way the world is looking, how this is going to play out as far as interest rates go to a certain extent. I think what the world is saying, hey, if we get into an inflationary spiral, the U.S. will be the last to raise interest rates. If you're betting on inflation, be long gold, long the gold, and short the dollar. But I'll tell you another thing too. A couple of months ago, 6 months ago, I was telling people I think gold's going to $2,000 an ounce, and I got snickered at, $2,000 an ounce. Hey, it's looking like that is a real target. And yeah, short term, 1500. You look at the chart one way, it looks overbought, but if you look at the world, it doesn't look quite as overbought as the risk is at this point.
Jonathan, this is intriguing now because Jean-Claude Trichet sounding, and no doubt will sound this week, fairly hawkish when it comes to future rate rises, which the market's now pricing in as happening sooner than later. But if they get their own inflation genie out of the bottle with high PMI, for instance, how different are they to the US? They can't surely raise rates under such circumstances.
Well, Carson, this is the big thing. Let's look at that data when it comes out. The world, in my mind, is divided into two zones, and it just so happens that those that have demand pull are in the east, those that may have cost push inflation are in the west. Now, I think the West is in a worse position than the East, and if you continue to get those numbers of inflation starting to pick up, where you have a cost-push inflationary environment, that just will play havoc with the ability of these austerity and stimulus programs to actually work. In the East, it's perhaps a different story because you've got those inflations there and this is only going to dampen it. So the East will be in a better position to weather an inflationary environment over the West. And that to me is the concern, and also the concern that the equity markets aren't really focusing on this at the moment, and they're remaining relatively strong. So I think there is a disconnect, but the market might focus on that if in fact inflation starts to pick up.
Phil Flynn, are we in an environment potentially of a vacuum where speculative buyers really run the show in the pits where you are?
You know, I mean, I hear that from a lot of people, but really, I think the speculative buyers are reflecting the increased risk in what we're seeing. You know, I had a real interesting debate with one of the floor traders who traded grains on the pits for years, and he's saying, "Wow, look at these record hog prices and cattle prices. You know, these funds are driving up the price." And I go, "Well, what's different now than the old days when hogs would go limit up and bellies would go limit up?" He goes, "Well, back then we had traders in the pit. We had traders." And I go, "So it was the traders running things up?" And he goes, I go, so, I mean, listen, I mean, I'm a big believer the fundamentals are here. Why are we seeing record open interest in the oil markets? Why are we seeing record volume? I'll tell you why. Because there's record risk in the market. There's record interest. The speculators follow the fundamentals, and they're driven to the fundamentals. It's not the other way around.
Yep. Just a call in the last few moments by Gold Core on Dow Jones saying gold will challenge 1,500 in the coming weeks, and saying, look, it's not in a bubble. That only happens when greed and buying motivated to make a quick buck becomes widespread. So far, most demand has been safe haven buying. Listen, really appreciate it, gentlemen. Phil Flynn from PFG Best, Jonathan Barrett from Commodity Broking Services.
Thanks, Cousin.